Thank you. So I guess we started with cars, and we're going to finish with cars in a slightly different way. So what I wanted to do to start is just to give you a bit of my background, which probably explains a bit the history of the company, or at least the recent history of the company. So I actually started my career not here in Europe, even though I'm European, but at a very interesting time and very interesting place, which was Silicon Valley in 1999-2000, during the first wave of the internet, during the first boom. And back then, startup was not a career choice, actually, for a French engineer. I mean, I didn't know anything about startups. I didn't know anything about venture capital or scaling business models. And I went through these very interesting 7 years, actually, going through this cycle of hype cycle during 1999-2000, and then went through 9/11 and the collapse of the tech industry in Silicon Valley, and sort of the restart of that in 2003 to 2006. So after 7 years, I decided to come back to Europe and discover the other side of the startup ecosystem, which is venture capital. So people actually funding and financing startups. And I've done that in Europe. So I moved from San Francisco to London. And I ended up working a lot with like Swedish, Italian, UK, US, Israeli companies. And I had a bit of this naive dream when I came in that we would be financing the European Google or the European Amazon. It turned out to be harder actually in Europe because at least back then in 2000, 2009, essentially 2007, 2009, most winners in Europe, most startups tended to be like a German winner, like a German e-commerce company or a French marketplace. But very few people actually cracked that at a European scale. And during the same time, I was lucky enough to meet two guys and co-founded BlaBlaCar. And then one of my key missions at BlaBlaCar was, how do we make that a European company? How do we not make that a French company? And how do we define our footprint as being Europe? So today I travel a lot between the HQ in Paris and all the offices we have in Europe. And when I was asked to prepare the presentation, I was thinking of, what does it mean for me, new disruptive business models? And I guess it means three things. For the most part, what we do is we don't invent, right? We're not like a patent-based or an IP-based industry for the most part, at least if I think of like consumer internet or the sharing economy. We tend to solve old problems in a new way, right? The other thing is most of these businesses, and we talked about that this morning, scale rapidly, and they scale at what I called like low marginal cost, maybe it's zero marginal cost, but they scale very rapidly, which means, and if you think of that, if you think of WhatsApp, I mean, WhatsApp went from 1 to 500 million people in a few years. That's faster than Facebook, that was faster than Google, that was faster than Microsoft, that was faster than Intel. So the pace of change is actually accelerating. And it means we, as entrepreneurs, need to adapt to the pace of change. Large companies, the car manufacturers, the telco need to adapt to that faster pace of change. And politics need to adapt to that faster pace of change. And last but not least, and we discussed that a lot this morning, is the future of the European economy, is the future of the economy, period, right? Everything is going digital, and we talked about that quite a bit. So here's the old problem, right? And the old problem we're trying to crack. So it's something we know. In a way, it's been the same problem for like 100 years or more since the first Ford T. People tend to drive their car alone, right? So they carry like 3 empty seats all the time that are completely unused. And you have this idle asset, this wasted capacity, traveling around cities, traveling within cities all the time. Now, how big is that problem, right? It's actually a huge problem if you think of it, right? Today, 3/4 of Europeans travel by car. So we don't travel by bus or by train or by plane. For the most part, we actually travel by car. And today, Europe is actually 1/3 of the global problem. So I've heard this morning 1 billion car. I got a different number, which was still very big, 750 million cars on a global scale. So if you think of Europe, it means in Europe we have 250 million cars, 4 seats per car. So we have over 1 billion car seats in Europe. So we have more car seats in Europe than people, actually. That doesn't make a lot of sense, right? And the issue is that the car occupancy is very low. So what we've built at BlaBlaCar, the basic concept of the sharing economy in general, is that we allow drivers, regular people, to actually share their ride when they travel typically between cities. So if you're traveling between Brussels and Paris, you can go on BlaBlaCar and you can offer your empty seats for, let's say, €20. So by doing that, not only you're reducing your cost as a driver, because suddenly you're not paying 90 euro of petrol and depreciation and insurance on your vehicle, you're only paying 30, so you're offsetting your cost. And as a passenger, you do Paris-Brussels for 20 euro in a car, which is like an unbeatable price, especially when you book last minute. So the way we've done that, I mean, obviously the idea has been around for a long time. The reason it never scaled was we needed like a marketplace, we needed communities, we needed to build trust within this community, and that's been enabled by the internet, by the social networks, that's been enabled by mobile phones to a large extent. So today we've built this platform where people can share their ride very efficiently, where we can verify who people are, we can create this trusted community of people sharing rides all across Europe. And is that an effective solution? Yeah, it is a very effective solution. I mean, today, if we look at the BlaBlaCar world, this community that's very small compared to the car ownership on a global scale, we have 2.8 people per car on a BlaBlaCar. So if you scale that, if you don't scale that, it maybe doesn't matter. It becomes like a small community of people sharing rides in a city or in a country. But if you think of it at a European scale or a global scale, it means we could potentially reduce the number of cars by 2 in the long run. That enables also access to cars to lots of people that don't have cars. That enables actually connection between cities that were not connected before. So suddenly as a passenger, you can go from A to B with a car, direct, last minute, very quickly, when sometimes you have to take 2 or 3 trains actually to get there. So, but most importantly, it scales, right? So if we look at the growth of the community in the last few years, actually, we're getting to 10 million members. We're growing at over 2 million members every quarter, and it's accelerating. So in the next year, we expect probably over 10 million members, so it's almost the size of Belgium, to actually join the BlaBlaCar community on a European and a global scale. So I wanted to go quickly on how we've built that European company and how we did not end up just being, I guess, a French company and hence a smaller company. So the key thing is we decided, and it was a choice, we decided to build our footprint and our market very early. So 2009 was the first office and the real sort of commercial start of the company in France. By 2010, we opened Spain. 2011, we opened the UK. 2012 and 2013, we actually started to acquire companies to scale faster, which was a way to actually accelerate the growth all over Europe. And today, after raising $100 million, as mentioned earlier, we can go global. And in a way, we can go global because we are seen as a European player and not a single market player. The other thing we've done is we kind of recreated Europe in a way within the company, and we decided to grow with like local teams, or what I call like autonomous local teams. So first office in Paris in 2009, very quickly we had an office in Spain, then in London, Warsaw, Milan, Hamburg, and now we're going global. So that was one of the key of the success was today we have German people driving BlaBlaCar in Germany, we have Spanish people driving BlaBlaCar in Spain. So we created this European culture within the company. So now, reflecting on like what's been easy and what's been hard for us, and how could things evolve in the future, I thought like the key strength actually of having a single market and where we are today. Today, clearly, and we see that all the time when we hire on average like the company's 29-year-old. So I get older, but we hire young people, and we keep the average at 29. And so that's the goal, and we'll see if we can keep that for a while. But we hire Europeans. I mean, today we hire people that have worked in 2 or 3 countries, studied in 2 or 3 countries, speak 2 or 3 or 4 languages, actually. So I think that has changed compared to when I was a student 15 years, even more than 15 years ago. And that's very positive, and it's been enabled by, like, essentially more coherence between degrees across Europe, by Erasmus programs, and all these things. It's also easy to hire, right? Today, if you want to hire German and bring the German to Paris, it's easy. It was not that easy, actually, 10, 20 years ago. And deregulation obviously has helped, right? So if we think of the telecom sector, lots of innovation have come thanks to Europe through deregulation. Then if I think of the challenges we had, I mean, the first one is we absolutely need, and I think we all agree here, that we need like a single market strategy. Because today, being just a French company or just being a German company in this digital world is irrelevant, right? Because you won't compete against US counterpart. I mean, today you see China actually with Alibaba, they've built like a $160 billion company, biggest IPO in the US. So unless we have like a single market in Europe, we won't be able to compete. And the thing that was difficult for us was actually when I was talking about all these offices, was in Europe you have this challenge of localizing everything. Not just languages. Languages is easy actually, but legally it's a different legal structure. We had to set up several companies. We had to change our terms and conditions. So we had to worry about all these local regulation, local rules, and local legal issues. So that's one thing that could change. On the bright side, and we see that with BlaBlaCar and we see that with many services, actually it is a single market if you think in terms of behavior. I mean, today people use BlaBlaCar in Germany, in France, in Italy, in Poland, even in Russia, in fact, more or less the same way. So it is a market that is unified. We just need to essentially make it flat. And then we also need to essentially help the startup ecosystem in Europe, right? So you have different hubs between London and Berlin and Paris and several others. So we need to foster that and help also the venture capital industry to some extent to finance these European companies. Slightly out of time, but thanks.
Nicolas, thank you. It was absolutely fascinating, I have to say. And my first request to you is please come to my work session on the digital single market, because you had a lot of interesting things to say. Now, Nicolas, you make it all sound like it's a no-brainer, sharing economy, great things. But the reality on the ground is, of course, that there's also a lot of opposition to it. Now, your company, I want to talk to you about this in a moment, because to my knowledge, you're not even a company, but we'll talk about that, is... I mean, we've seen what happened with Uber and to some extent also with Airbnb. Have you faced that kind of opposition, and how are you dealing with it?
No, so far it's interesting because what we do, I would say, it scales very fast, but it doesn't scale as fast as probably Uber has scaled. So the pace of change is not the same. But then the key difference is we were lucky enough to operate within like very clean, very sort of easy regulation environment, in a sense that our drivers actually are just regular people sharing their ride, right? So in a way, it's not about like professional drivers making a profit and competing with taxis or anything like that. It's just a community of people sharing rides, right? So we enable something that happened informally, and we've just grown it essentially.
Excellent. I mean, who would then consider you competition? Is it primarily the train operators?
It's a mix. What's interesting is it's a mix of different things. So obviously it could be train or bus operators. I mean, when you scale at the size where we are, clearly it happens. But it's also there's something else going on, which is if you create like essentially an option to go from Paris to Brussels last minute for €20, you actually create demand. And what we see is we see lots of people saying, I would not have traveled otherwise because it was too expensive. Or I travel more often because it's a lot less expensive. So actually we create mobility in Europe.
And a new market in that sense.
And a new market.
Because
and we also
these people would not have traveled otherwise.
Yeah.
I think that's extremely important to understand. Now, can you say a little bit about your legal structure? Is it a company in the traditional sense?
Yeah, no, it is a company in the traditional sense. I mean, what we've done is we decided to expand across Europe very rapidly. So we've done that by setting up offices. And that's part of the challenge of expanding in Europe, because you need to worry about, what do I do? Is it a subsidiary? Is it a branch? Is it this? Is it that? Or does it work? How do I employ a German versus a Spaniard? And if you think of it, it's a bit of a waste of time at the end of the day, right? You would want to be able to expand within Europe, not really thinking too much about legal structures.
Well, it also flies in the face of our illusion that we have a single market in Europe, because it really shouldn't be that difficult, right? I mentioned in my introduction that you recently raised $100 million. Congratulations. Can you tell us a little bit about the investors? Did they come from Europe, elsewhere?
So it's a mix actually. They come from both Europe and the US. So what's interesting is we've done that in different stages, right? So 2.5 years ago, we raised $10 million. And the bet back then was, can we turn that into a European company? And in a way, we're not done yet, but we've accomplished part of that. And today, the $100 million came from a mix of US and European investors. And what was interesting, two things. A, the scale. I mean, it's a lot of money. And it enables us to go from Europe to global. And I guess you cannot do that if you're not Europe. So the first step was how do we create this European company? The other interesting learning here was we never pitched entry into the US. So today you can actually, as a European company, say, I'm going to build Europe. I'm probably going to build like a global scale. I don't have any plan to go to the US in the next few years. I might never go to the US, in fact. and you can still find actually European and US investors backing you with $100 million.
That's very interesting. So just to be clear, because this is an issue for a lot of successful companies starting up in Europe, but you did not have problems raising money. Is it just now that you are more successful, or was it sort of a struggle at any point?
No, it's always been a struggle. I mean, the first time we raised money was 2009, so it was post-Lehman Brothers. And no one was investing, right? So
well,
the first
also in the middle of the financial crisis.
Yeah, it was the middle of the financial crisis, and the sharing economy was not even a word, right? It was not obvious at all. So the first 600K was a bit of a miracle, calling every friend and every potential investor on the face of Earth, right? So now it has changed because people see that as, yeah, it's a real movement, it's the future of the economy. It's never easy, but it's easier. Right?
Do you have any sort of messages for people who say, all this disruption, it really scares me, and I don't know, and we're going to lose jobs? And what does it look like from your vantage point? Because you wouldn't be here today were it not for digital technologies.
Well, if I look at what we do, I mean, we are a 170 people company. 29-year-old on average, so we keep talking about unemployment of young people in Europe. Here we are, hiring like on average 29-year-old across Europe. We're probably going to create like 100 to 200 jobs in the next year, mostly in Europe. So I think it's just the pace of change is good actually. I mean, the danger is not to get on the train, so to speak, for Europe.
And I think this is a very important message for all of us here. You can build these very successful companies right here in Europe. And I think that is really something that instills us with a lot of hope. And congratulations to you. I think you're one of these emerging superstars from the digital sector here in Europe. So it's great you could be with us. Ladies and gentlemen, Nicolas Brusson.
Thank you.
Thank you, Nicolas.